Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for May the 17th to the 21st, 2021. Hope you had a good trading week. Lots to talk about this week, lots of charts to go through, lots of stuff moved this past week. So, bigger picture first. Right now the markets are being driven by inflation fears. This is a narrative that's been playing out for the past month or so, and we've been keeping a close eye on it as well as our levels because that's what's driving the markets right now. Predominantly the inflation fears, and they're playing out in terms of the bonds and that bond trade. So this past week, inflation came in very, very hot with that CPI and PPI number on Wednesday and Thursday respectively. They came in hot. That means it was a higher print than expected, even though most of us who don't keep an eye on that CPI and PPI number can tell you, that things that are going up in price. We know that, anecdotally, through gas prices, through food prices, through services that we may be buying, everything's going up in price. And we finally got that reflected now in the data. So the question is the inflation number we're seeing here, is it transitory like the Fed thinks, or is it start of a bigger cycle? And that's the worry now, is that if inflation continues to run hot like this, how long can the Fed continue their very, very aggressive monetary policy? That is to be buyers of bonds. When is it that the Fed needs to begin to taper these asset purchases and begin to look at raising rates? Because the markets do not like the threat or the prospect of a rate hike, and that's what's being priced in right now, and that's why we're seeing the continued weakness in the very interest rate sensitive names like the tech sector and of course Cathie Wood's ARKK ETF. We'll get to that in a few moments. So let's jump at the charts now. We'll talk about our usual assets, and we'll do kind of a deeper dive around cryptos as well, because that's certainly affected by the potential rate hike, the potential for rate hikes. And it's very, the crypto space now is in a very tricky spot where the buyers really need to begin to step up here and defend. Otherwise, we can definitely see some more selling. So let's get into the charts now, and we'll start off, as we always do, with our friend the Vix. So we'll jump to the Vix here. We'll turn off the chart, make some space there. And what do we see here? So the Vix, and I'm going to show you something new this week, something that that I use in my trading, but I haven't shown previously in these videos. But let's begin. We always begin, and that's the Vix chart. So the 1 month Vix chart tells you pretty much everything you need to know right now. We are still going well, actually, it did get extinguished this past week. We got the higher high. So we had been going Momo down on the Vix until this past week. We've been talking about that potential possibility coming into the week now, because we had a very, very close close last week, and it wasn't going to take much to break above last month's high. We got that, but that may have been, using that famous word, transitory. The Vix hit that upper end, took out the prior month's high, but fell back low again, and we're seeing Vix and the volatility come back out of the markets again. So for now, it's going to be an outside bar for the month. No matter, we still have 2 trading weeks left of the month, but no matter what, doesn't matter if we close above or below or somewhere in the middle, it's going to be an outside month, meaning next month we need to definitely be watching to see on which side of this month's range this price transact. But for now, outside bar, but currently trading near the lows of the month. On the weekly chart, we got the double outside week. So this is what we were watching for, right? Last week, right here, I'm gonna just slide over there. Last week we had that outside bar like this, and the question was, on what side of this past or last week's bar was price going to transact? And we got our answer pretty quickly. It went outside bar and up, not before taking out the low first. Outside bar up and creates the double outside bar. At one point in the week, it was running quite hot, so we actually had a pretty good pop in the Vix here. Look at the volume of the Vix, most amount of volume for a while. And that was the question, was can you hold above that quarterly open? We talked about it right last week. You got that blue line right there. That's the combination of the monthly and the quarterly open. Can you break above there and stay above there? And that was the range that I was looking at. And we actually did break above there shortly or temporarily, but we couldn't hold above that quarterly open. So that's very, right now, good news for the for equity holders, because if you see VIX break above that quarterly open, stay above there and continue higher, that's when you really have to watch out. So here's the indicator I want to show you that I use in my trading, and you'll see these blue bands on the upper end and the green bands on the lower end, and that's basically an indicator that charts the average monthly range. So basically, using a 5 and a 10 period look back, it tracks the average monthly range for on the weekly chart. That's why I have it mapped out. So think of it like an ATR, but I use the ADR, so the average. Not ADR, but AMR. So think of an ATR, but in this case, we're talking about the average monthly range using a 5 and 10 period look back, respectively. So we tagged that upper end of that band. I call it the AMR, the average monthly range, and it pulled back in. This is what I was expecting in terms of a tag and then a fade back, because it's very, very rare that the VIX actually can break above the average monthly range. Basically, what this indicates is anytime you are trading inside of the bands, price is basically trading in a range or within its average ranges. When you break outside of that range, that's when you see range expansion. And for the VIX, this is significant because if and when the VIX does break above and stays above that range, so let's say the upper end, that's when you can see a big move in the VIX. It's only when you can actually break above that band do you see these explosive VIX moves where they can go 20, 30, 40% gains in very short order. But most of the time, I'm talking like 80% of the time or even higher, when the VIX tags that upper end of that average monthly range, it fades back in. We saw it back here in January, and I'll just go back very quickly. It's very, very rare, even here, right? This is back in June of last year. We had that pop up. You have if it tags it basically to the T, and then the sellers come in and they take it back down again. It's very rare that the VIX can actually break above that AMR for abbreviation and stay above. Now here, this is when we had the pandemic, okay? In March, when February started, February right here, right? It broke above, and that's when you can get these huge moves of 45%, and up here was actually close to 100% here when it went to 2 or maybe 70% when 207 up to, what was the high there, 315. So that's what I'm watching for, and so long as the VIX stays inside the bands, right, it tends to fade. So far, even though we had a bit of a pop this past week, it faded back in again, and now if history is any indication, we're likely to fade back into the range, and we're going to basically be consolidating once again, or on the VIX going back into lows. So that is the good news for the buyers of equities, of the stock market. The bears had their chance. They gunned it to the upside. They shook out a lot of folks who were on the who maybe had bad trade location, who had been chasing price and going into highs. They got stopped out, and all the weak hands got stopped out. And now I think we're going to see maybe a couple of weeks of just basically, either buying on the equity side, or at least some consolidation here, as I think we saw the VIX move for the month. That was the move, and it's, I think, very unlikely now that unless we get another shoe drop, another big scare, it's unlikely the VIX can go back above and break above this week's high. Not saying it's not possible, but I'd be very surprised, and that'd be something that would be very worthwhile noting. So that'd be significant if somehow in the next 2 weeks, we have 2 weeks left in the trading month, if price can, let's redraw our ranges, break above the high of this past week. That'd be very, very significant, and you definitely want to be very, very mindful of that if that were to occur. But this is what happens when you see the price action. Very clear stuff. Okay, once you understand it. So down here on Monday, it created a lower low, and then it creates a higher high. That's what creates the outside week for the week, and it did the Bollinger Band walk, right? So it tried to anyways. It broke high on the Bollinger Bands, and then Thursday, see, immediately broke below, and then fades back into the range again. So you have your double outside bar. Now this coming week, on what side of that range does it break? So this, again, going back to that weekly chart, you can clearly see it's a big range, right? So it's relatively, we haven't had that big of a bar since back here in Feb, right? So at this point here, would not be surprised if we get maybe some sort of inside bar, or even just an outside bar down again, and just keeps melting. So we had our scare. Again, unless something big happens and we get some unexpected news, I think that more than likely we will see the VIX melt back lower again. I'm still operating on the assumption that the Fed ultimately has no choice but to keep rates lower, given the servicing debt, or the amount of work that debt that's out in their system. They can't service the debt if we see a rise in interest rates. So I think the Fed will have no choice but to run the economy hot. But for now, we may get a pause for a couple weeks, as I think we've had the move for the month. So we'll see about that. Let's go to SPY now, and that'll really kind of put things into perspective with the SPY. So the SPY, big picture, even with the selling we saw this past week, it's basically a blip. Look at the monthly chart so far. We're down 0.17%. Yes, we were at all-time highs. Yes, it pulled back, but on the broader picture, does that look scary? Not yet, right? So a lot of folks, when they, when the market's calm and and the week of trading is done, people can take a step back and realize, the SPY is actually still in pretty good shape. We've had 7 consecutive months of higher highs and higher lows, and this is not yet threatening. In fact, the buyers have brought it back now. With 2 weeks left, still got a lot of trading to go. If, let's just say, the bar ends like that, that's a momentum hammer on that monthly chart. So this so far, it's something worth paying attention to, but it's not threatening yet, so it hasn't changed the bigger picture. Now on the weekly chart, we did get a lower low. So we had a outside bar last week, and then the question was, on what side of that range does price transact? And we had basically a week where we sold off right away. We had a bit of momentum in the beginning of the week, and then they faded it right away, and then buyers stepped up. Now look, there's that lower band that I talked about, the AMR, the average monthly range. We tag it pretty accurately, and at no point do we even threaten the quarterly open. So the SPY is still very, very healthy. They picked it up. They basically defended near the AMR, and they defended at that 8-period moving average on the weekly chart, and basically closed it right back on the range. So outside bar down, and this coming week, if we can break above this week's high, that repairs everything. If somehow this coming week it breaks above this week's high, then that's basically a Momo down reversal long back to the upside, and we can find some new highs pretty quickly on the SPY. But for now, let's see what happens on the daily chart. It looks like this. Okay, so going into last week, remember that we were talking about this chart. It was Momo up into the Bollinger Bands. The question always is, when you get into the Bollinger Bands, you got to keep going. Otherwise, if you don't, what happens? It fades it, right? So this is bad structure, especially going to Bollinger Band highs. So Momo up. Once you break that low on Monday, that's what happened. It broke below that low, okay, and then immediately it does the Momo up reversal short, and then basically stops out anyone who had been chasing this poor market structure. So if you're a buyer up here, that's a really poor area for trade in terms of trade location. You get stopped out immediately, and you get punished if you don't close your position. So this is what was significant, right? So this is what I always talk about. If you open high and come in lower, that's immediately a high print, and it's very, very unlikely you're going to be able to take out the weekly open and make it a green week. So immediately when you give up that high open, then you pretty much need to be biased to the short side, at least intraday / intra week. So it gave it up. It gives up the monthly open, so now you have a red week, a red month that really puts the wind on the back of the on the trade to the short side, and they immediately fade these guys. And who's long in this sequence all the way down here, right? So anyone basically since the unless you bought here at the beginning of April, here you're underwater. But except for here, you're still somehow you were able to hold from here up. It definitely scared you because it came in very, very aggressively. That's what typically happens, right? We see this kind of structure. All it takes is a couple vertical bars like that, and it shakes everyone out. So this day here, we're down 2.12%. And guess what? That 50-day moving average holds. So what else am I seeing when I look at this chart? The 50-day, right? That's always something level that we want to watch, because we've had multiple tags before. And I was saying before, right? In the last couple weeks, once you get that Bollinger Band tag to the upside, it's very likely, remember when we were going to here, I said this is consolidation, and it's very likely now we play ball, I call it, kind of ping pong, where you go end to end on the Bollinger Bands, and that's what we got, right? So we tagged one end of the Bollinger Band, and then we tagged the other end of the Bollinger Band. Tags the 50-day, below the Bollinger Band. If they try to Bollinger Band walk it on Thursday, basically get equilibrium. The sellers run out of steam. They can't push it any lower. The buyers also, keep within the range. And then on Friday, we get this inside bar up now. So this coming week, what you got to watch out for is if somehow the sellers can negate Friday's strong bar and break below Friday's low, you got to watch out there because it's going to come back down again. So it's possible here this is just a temporary relief rally. If you break below Friday's lows, watch out. You can come back in here in very, very quick order, or at least fill this gap that's right there. Otherwise, you still got a green quarter, but you got mixed time frames now, right? Red month, green quarter, and wherever we open up in on this week, that'll be your weekly open. So it could be very well now that we're going to have a bit of this action here for the rest of the month, because all in all, remember, going back to the monthly chart, if you can just keep your eye on the bigger picture, that monthly chart here, it's going to take a lot to reverse this, right? You actually going to need to break below April's lows in order to create a reversal, and even then it's just an outside bar. That's not the end of the world when you get the outside bars. That would be significant because you could perhaps get a red quarter if you can stay below the quarterly open. A lot of work to do though for the sellers. So right now, if the buyers can just keep it looking like this, like that bar right now, for the rest of the month, it's actually a pretty decent month, even though it's a down, 17 basis points. Okay, so there's your daily chart. Your inside bar up now. Just watch out if it does a fade here on Monday or Tuesday. It's not gonna break below this low, and you got to watch out for these lows being back in play again. Otherwise, yep, as I said before, that monthly open is going to be tough to break above. That's always going to be a level that sellers will try to defend, and then you might have this mixed time from stuff, which ends up being very choppy. All right, so that's your weekly chart, your monthly chart, and your daily chart on SPY. Let's go Qs, because the Qs have been very, very weak, and that's because we know there are a lot of interest rate sensitive names in the Qs. So a threat of rising interest rates is not good for growth companies. This is why we've seen the names like the names trading in the SPY and in the Dow a lot stronger. We've seen a real exodus out of these high growth names like high growth tech stocks, as well as these innovative names that are found in the ARKK ETF. So this month we did get the reversal. So that was an up month. Now we had a down month, but look, they defended the quarterly open. That quarterly open is still green, right? They're trading above it, and then we get this. So yes, right now that's looking like a bit of a shooting star, but we do have a bit of month, a bit of a lot of quarter left and a bit of month left. So this is not done yet by any means. So right now, shooting star on the quarterly chart, but lots of quarter left, so that's not significant yet. For now, continue to watch to see if we can trade below that quarterly open, because if you can get below that quarterly open, then you really want to be biased to the short side, because that is full time from alignment to the short side. It's easier to try to short than it is to buy. Weekly chart looks like this. Okay, we have 2 consecutive down weeks now in a row, and look at that. The quarterly open right there, they held it. They defended that 20-day moving average on the weekly chart, and there is your AMR. See, so it's closing right inside the range now. Look, we had that same kind of thing back here in March. Remember that March scare where it went like that? Well, guess what? The AMR's held, and so even though we did overshoot and break below it, the fact is you're staying inside of this range, and so long as you stay inside that range, the buyers are doing what they always do, and that is they hold it inside the trading range. So that's what we're seeing right now. And ultimately, we saw this pattern play out, right? We saw the Momo down reversal play out that created the all-time highs, right? These new all-time highs came back over here, and the question now is where do you go from here? Because you got the monthly open there, you got the quarterly open here, and that's going to be chop city if you stay inside like that, right? So that's, I think, what we can expect to see happen now for the rest of the month, unless somehow the buyers can really step up and break above this past week's high. Then maybe we get back to the monthly open, but then I definitely see some buyers or sellers stepping up here to try to keep the month red. Okay, so there's your Qs. And actually, one thing before I move on to actually, let's go to the daily chart very quickly, because you're kind of seeing the same picture as we saw here on the SPY. But you got the Momo, you got the the Bollinger Band walk to the downside. Look, Bollinger Band walk to the downside. It broke below the quarterly open, so this was a red, the corridor's red here. But guess what? The seller just ran out of steam. And that's because it's been pretty extended already, right? We've had a multi-week down move here now. And look, this is very clean price action. It's a, Bollinger Band walk to the downside. right? And then finally here on Friday, they break above this inside bar and it basically breaks that Bollinger Band walk to the downside. Now, I think it's very possible that, if we break below Friday's lows, once again, that puts the trend to the downside back in play. So if you can break below Friday's lows, then once again you can get that move back to the downside, maybe some more selling in the Qs. So it's possible now this is simply a short pullback. If we break below these lows here, then definitely sellers will step back up again and try to push things lower. So the buyers are not out of the woods yet, or the Qs are not out of the threat yet of more selling until we can break get back up here and back into comfortably into the range that we saw earlier. Okay, so let's take a look now at ARKK, Cathie Wood's ETF, because that really shows you the damage that's been done. So, if you remember last week, I talked about how the Momo uptrend had been extinguished last week, right? When it went Momo up here, and we finally broke below that bar, which extinguished that Momo up move, as well as broke that Bollinger Band walk. We had a bit of continuation this past week. So now, how far can we go? I think if you look at the monthly chart, if we see sellers continue to step up here, and we continue to have the inflation fears, then I think we can get more selling in these tech names, especially because we know that people are gunning after Cathie Wood's positions in the ARKK ETF. So this would be a level that would be very likely to get taken out if we see more selling set up, right? They want to go after that November low there, and that would basically give back and retrace all the gains that we saw since that period. Okay, so that's what I'm looking at right now. If we can get that weekly break to the downside, they're going to continue to sell this thing and see if they can take out November's lows right there. Inside month and down right now. Let's just see how far things go. Okay, so to end the week though, a bit of reprieve. Possibly now we get this break on Monday if they can gun things a bit higher, inside bar up. Maybe we get a multi-day leg up here. But you're trading below the 200-day moving average, so very possibly come back into here now, maybe find some resistance and comes back lower, because you're trading full time from alignment to the downside. It's actually easier to trade to the downside with the CTF than it is to be trying to pick these bottoms. I would not be trying to pick these bottoms here. The trend is pointing lower, right? So certainly it's possible that these growth names could be in a protracted downtrend here for a while. So red month, red quarter, and it was a red week, but so this week here, maybe you get a little bit of bounce, and then maybe next week we come back in again and get new lower lows. So that'd be the best, maybe for the bulls. I think the best hope is that they get a multi-day move to the upside, but I would not be surprised whatsoever to see sellers step back up again and try to get more downside, because that's that level we talked about there, those November lows, 89.39. Let's revisit our SPY chart, where we overlay the number of S&P 100 stocks above the 50-day. And I pointed this out many weeks ago, that this was the possibility that we needed to watch out for, and that was that this negative divergence could play out. So remember, we called it out here. Now this chart's not lining up here. Let me just redraw that. There we go. Redraw that. There we go. So we got that print right there. That was a very high reading, right? So this is up here as like a 94% reading here, where is the 94% of those S&P 100 stocks were trading above their 50-day, and that was significant. And the question was, would we see a negative divergence? And we did. All right, so we came up here, we got new all-time highs with on weaker breadth, right? We were watching that. It was on weaker and weaker breadth. Actually, I think originally I had it anchored here. So we continued to make fresh highs, and we did not get a higher reading. Why is that? Because it was 94%, right? It's very, very difficult for it to get a higher reading there, and ultimately that's when you begin to see some a broadening formation and a distribution effect, where you see more sellers than buyers. And that's simple supply and demand dynamics. Why does price go up? Well, it's because there are more buyers than sellers. Why does price go down? It's because there are not enough buyers to continue to lift prices higher. In fact, we run out of buyers and then they become more sellers. And that's ultimately what we saw, where there were no more buyers to step up here. And we saw finally that Momo up reversal short that we saw this past week. And, that causes this to happen very, very quickly. Now, again, the SPY is still in a relatively strong position compared to the Qs, but that was always the danger here, was that when you head into highs and then you get this negative divergence, that if you continue to go up on poor market structure, it doesn't take much then to come back through again. And that's why all the stuff here, right here, was very dangerous. Once we got that negative divergence, being a buyer here was always going to be an issue, because we very well knew that was the potential that this could happen here. And even though it may not pull back much further than that, because you still got the quarterly open here, that's always you have to watch out with your trade location. This is basically a place where you don't want to do much, right? You don't want to be getting aggressively long here, trying to break these all-time highs and get new fresh all-time highs when you have weaker and weaker breadth. Okay. So, we had a pretty low reading here. We were down to, I think it was like 70 something. Yeah, 72% roughly. So that's, that's actually not bad, because now you have some people got washed out, some longs got washed out, and now if we can begin to create this, higher highs again, and the breadth starts to get stronger again, then maybe that, that puts us back in the a position where the SPYs can once again make higher highs. But again, the monthly open is always going to be a challenge, and that puts it right there, as you spoke about already. Let's keep going on here. So there's your ARKK overview. There's your SPY overview. Let's go to Dow. The Dow made some new highs, I believe this past week, right? Yeah, early in the week. But then it did what you have to worry about. That is, it opened high and then closed lower. So going into the Dow chart, well, just first off, this Dow is the strongest of all the indices right now. Because of all the cyclical names that are in there. If you believe that we're going to see inflation play out, then a lot of these less interest rate sensitive names are in the Dow. And now we've had how many months? 1, 2, 3, 4, 5, 6, 7 months of higher highs. Currently a green month with the Dow, even with a bit of selling, still trading strong. So the week does end though as an outside bar, and guess what? Yeah, you tag the upper end of that AMR, cannot break above it, and so all likelihood we fall back into the range again. But there hasn't been that much technical damage done. It did shortly turn into a red month, but the buyers step up off that 8-period moving average on the weekly chart. So the Dow looks like this, and just like we saw last week, I said this is the danger. You got a Momo up going into the Bollinger Bands. We don't know how far it's going to go, but we do know what happens when they break, right? When it breaks and it's Momo up and it's in the Bollinger Bands, that's a confluence. That's a confluence of poor market structure, and that's what happened here. We got a gap down on Tuesday, and bye-bye. Unfortunately, had you been long anywhere in this sequence, you're underwater, right? So that definitely caused some pain there. But ultimately, inside bar, it pops back up again, and we still, this week here, if things break, we open up here, we trade above that, that's back to full time frame alignment in the Dow, all right? Green quarter, green month, and if you trade above where we open, that's a green week again. So you can't fight that trend. Dow, again, possibly depending on where we open up and where we trade from there, it can go higher. Russell, also one of the weaker indices, not as weak as the Qs, but not going anywhere either. We did get the lower month though, so inside bar down, trading below the quarterly open. So right now, that is a red quarter on the Russell. What's that look like? Looks like this. Inside quarter. So is that a dangerous place to be? Not really, because you're inside quarter, and the reality is that yes, you can certainly pull back further, but I don't think we're going to give up Q1's range. It would be something exceptional that would have to happen for this 12% move to get negated this quarter. I don't think it's going to happen, but anything's possible. But right now, if I was a betting man, and I am, I don't think it's going to break outside that range. So I think there's some downside pressure there, but I think the overall trend is still upwards and higher. It's just that it's not going to be easy trading like we had back here. We're now going to be inside of this range where it goes more like that. So this coming week, what do we see here? Let's redraw our ranges. We tagged the lower band of that AMR. There's your average monthly range. They tagged it. The buyer stepped up. That means there isn't range expansion to the downside. Now we still got a couple of weeks left in this month, right? So if the sellers can step up once again, overwhelm the buyers and break below that AMR, then maybe we get that range expansion to the downside. But with this big wick here, it just shows you the buyers stepped up and they defended that area, that AMR area, as well as the that 20 period moving average. So that's what it looks like on the Russell. Here, however, we got, it looks all the same on most of the indices, right? So you got the Bollinger Band walk to the downside, you get the stalemate on Thursday, and they pop out on Friday. This thing, however, is still trading with full time frame alignment to the downside. Red quarter, red month, red week. So even if you do get a bounce here, I still think there's going to be a lot of work that has to get done to fix this chart. Ultimately, I think what you're going to end up with is you're still going to end up with a chart that looks like this when the month closes. Inside bar down, maybe close down here further, but I still think that you're still going to be ultimately inside of this bar, right? That is March's range. Not sure how that's going to break out below there. I think it's very, it's a tough thing to do. Not out of the picture, but that's you have to first begin by breaking and staying below last month's lows. And like I said already, this week they protected it, right? They defended it. See that yellow line? Right, that yellow line is last month's lows. So we said this is the Momo up reversal short that started last week. They finished it off this week, right? They took out that pivot like we thought they were going to do. Problem now is that bar stepped up. You're back inside the ranges again. You're above the monthly last month's lows, and it looks like bars are defending here. So let's see where they go from there. Right now, kind of a neutral stance on Russell until we can break below not this past week's low, but back up below this. That orange line, last month's lows. Okay, so if we break below there, so we do some sort of inside bar up reversal and trades back below there, yeah, get short again on Russell. That can definitely go lower. So for there, let's talk about emerging markets, because emerging markets kind of going nowhere. It's kind of rangy right now, even though we did have a lower low on the week. Up bar, down bar, so we get a bit of a reversal there. We still have this quarterly open though, right there, and we still have an inside quarter. So we came close here. Can they break below last quarter's lows? It came close, but the bar stepped up once again. And look at that. They're defending it, and they're sitting right on that top end of that broadening formation. So this is acting as support right now, and the buyers are definitely holding it up there. So at this point, AMR got tagged. They defended it. We saw the other, we saw that broadening formation trend line, and they're holding it right now. So even though we did get that lower low, it's kind of rangy. It's actually kind of tricky here. All the bets are actually very, very tricky. So to be frank, for me, it's not that compelling of a picture. If I had to trade the EM in one direction, I would probably be looking for shorts, just because that's the overall trend is indicating down. Red week, red quarter, red month. But I wouldn't be surprised to see maybe another multi-day push to the upside. And then maybe some sellers step in, but for me, it's just even more range bound than anything, and not smooth trading here on emerging markets. But if someone had, if I had to take a trade, I'd be more biased to the downside, just simply based on the trend. But I don't think the trades are that easy. So EM, that's the picture there. Let's talk about the bonds, because that's what everyone's kind of focusing on here is the bonds, and the bonds are saying this, right? So here's the picture, inside quarter on TLT. So we have, still 2.5 months left of this quarter, so anything can happen here, but more and more looking like it'll either stay inside month. Bonds going higher, I think, is going to be very difficult. More than likely, though, we stay inside quarter. Okay. Here, we did get the inside bar break to the downside of the monthly chart, but they defended it. They picked it back up again, and they kept the quarter green. Right, so you really need to break and stay below the prior month's low to get the sellers really pushing this thing lower. But for now, I think we may have seen a bit of a reprieve here, because the bonds, they stepped up at the latter part of the week. So right there, you see that? So there's the prior month's low right there. They took it out this past week when they finished the Momo up reversal. We talked about that last week. If we break below there, they're going to take out that pivot. They took out the quarterly open, they took out last month's lows, but they bought it back again now. And so that's the tricky thing with the bonds, is I think you can head lower, but you got to break below that quarterly open and stay below the monthly open, and then the trade gets easy again. Until then, people are going to try to short this thing, but they will not be surprised for them to get stopped out a couple times before maybe it breaks lower. It's a couple days have to, I think, transpire before things become easy again. Because for now, the buyers did step up at the end of the week, like I mentioned already. It's very possible we do get a multi-day, maybe a week or so, we get a bounce on bonds. And that'll look like everything is fine again for the stock market. But we still have 2 weeks left. Let's say we even get a weekly move to the upside here. One bad week at the end of the month could cause things to come back down again and threaten that quarterly open and that prior month's low, and that would make things look very, very bearish again for equities. So I don't think equities are I don't think they're out of the woods yet, like I said already, but I think we might have a multi-day, maybe even up to a week of a bounce here, because we may have got extended a bit too fast. Because we said last week here, right, we had a Momo down move on TLT. Excuse me, no, we did not. We started off outside bar. Question was how was it going to break? Momo down move here, right? Going into Bollinger Bands with a Momo down situation move. That means it's poor structure because it doesn't take much to stop people out as people are getting aggressive. Inside bar, like we saw on the equity side, stalemate, and then Friday they crunch it close up 1%. That means now the shorts who got involved here, they have to worry about getting stopped out. Maybe it bounces for a couple days, like I said already, up into these levels, to the monthly open. And then, maybe next week they try to push it back down again. But I would not be surprised to see buyers step in here. We might get a few days of a bounce here for bonds as well as equities. So I think the trend is still lower. In fact, the trend is actually the bigger trend is actually kind of range bound. But short-term trend on the dailies, maybe a multi-day move to the upside, and then maybe next week we see some more selling step up again if the buyers begin to run out of steam. Okay, but for now, if you look at the 10-year, and I'm looking at that 10-year quite a bit because we're looking at that 2%, interest rate, and that's still something that's in the picture. I just don't think it's going to happen right away. Bonds don't move that fast. And what's that 2% area? Right up here. Why am I looking at that area? Because we know the pattern, right? We have the inside bar down. It's an inside bar reversal that's playing out. It's just taking several quarters to play out. We had that huge move last quarter, right? That's what scared the markets, because it's not normal for bonds to move that fast. So the moves themselves are actually not that, because it's kind of a base effect, right? Because it's such a low, we are such a low reading that it doesn't take much for it to move to pop higher. So we're only at, we moved from here from the beginning of the year. We were trading at, what was it, 90 basis points. We got up to 1.7583. Okay, so somewhere up in here at the beginning of the quarter. So that rate of change was pretty high, and that's what concerned a lot of participants here. Now the question is, I just don't think we're going to break above here this quarter. You have a red quarter right now. You got a red quarter and you're inside last quarter's range. It's difficult to break above there, and so more than likely we might get a couple months of consolidation. Then maybe in next quarter the move actually happens, where we try to go after that pivot there, and then that's very close to 2%. You might see an overshoot there to that 2% area, but I don't think it's going to happen this month. The month already went inside bar down, but they defended it, right? But I just have a hard time seeing how they're going to break above that quarterly open there, that blue line. So next month, I think that puts it more likely, because you have, let's say this month closes the way it does, then next month maybe we get the inside bar down, an up situation where it's an inside bar reversal, and then you break above that April high, right? Then you get this area. Now maybe you can challenge that 2% range. But right now, because you already have the monthly low that got created, right? The best case scenario is that next month it does an inside bar reversal to the upside. That's when it gets interesting, and that's why I'm saying for the rest of the month, even though you might see a bit of fluctuations here, I think pretty much it ends like this. But again, 2 weeks left. I could be wrong, but that's what that's what I'm seeing right now. Okay, so on the weekly chart, there's your down up situation. So a bit of interest rate scare. They popped it up, but they fell back on the range once again, trading inside of a range for the most part for the 10-year. Okay. Let's talk about gold, because gold has surprised me actually, because with the weakness in bonds, we had, again, I showed you, we had 3 good days of selling in bonds. Well, that's kind of a small day, but we had 3 consecutive days of red days, then one inside day. But gold was not showing that same level of weakness. So gold, for the most part, I think I even had a green week. Yeah, didn't really go that far, but the difference in gold is that it had 2 consecutive higher highs on the monthly chart, and I'm still of the belief that it's gonna have a hard time breaking outside of last quarter's range, right? So that's an inside bar inside of last quarter's range, but it's a pretty good month so far for good quarter so far for gold, up 7.14%. Back to the monthly chart, so we have 2 consecutive higher highs now on that monthly chart, and the weekly chart, small bar but strong, right? Here's the issue though. Has gold done its thing? Perhaps, right? Because now we're at the upper end of the average monthly range. Can you crack above it? That's the range right there. Can you break above 1847.50? If you can, that will be range expansion. And then let's see what happens there, right? That maybe gold is decoupling a bit from the bond trade. Let's see what happens. That's something that I'm definitely watchful of here, because yeah, if you break above this week's high, that's momentum. That's a momentum hammer right there. Maybe we get a bit higher. Still going to get stuck here, I think, at the upper end of that Bollinger Band. But yeah, that's, right now gold is full time from alignment with the upside. Green quarter, green month, it was a green week. So yeah, right now it's trending higher. Surprising on gold. We do hit that upper end of that AMR. So that's what I'm watching right now. Can you break above there? That's the question. Let's talk about digital gold, because as I mentioned right in the prelude of our conversation here, is that the digital asset space, cryptos, yeah, they have some work to do. They got beat up this past week on a lot of different kinds of headwinds. So I got stopped out at a number of coins, including Bitcoin. So I'm no longer in the Bitcoin trade anymore. I'm still long Bitcoin, obviously, from an investing perspective. But the charts themselves, they broke down this past week. I don't want to be a part of that when you start to see that kind of weakness. And now, the stage is set now where we can actually get, if the buyers will step up this week, you can get some serious damage to these charts, and then it's going to take some time for the charts to fix themselves. If you're a buyer, if you're a bull, then then it's going to take some time for the charts to settle out and get some higher highs. Right now, no matter what, more than likely we're going to end up the month. If best case scenario, you're going to end up the month inside of last month's range, okay? Because I don't think you're going to break above the quarterly high here. Very unlikely. In fact, at this point here, I find it's going to be very, very difficult for Bitcoin to break above that quarterly open this quarter, right? Look at that. You're down 15%, which is not huge for Bitcoin, but that level there has acted as resistance a number of times now this past month. And so it's becoming a stronger and stronger area here. And look what happened with Bitcoin, right? We had a multi-month Bollinger Band walk move, and it got broken this past month. We finally went down here that broke the Bollinger Band walk. So now we're not be surprised to see some more consolidation. If anything, the best case scenario is you get consolidation, and then maybe you get a continuation move. Worst case scenario is that you break below there and you keep going, right? Maybe come down here into the $40,000 area, even to the 36,000 area down here to test this broader, this larger broadening formation trend line. So the monthly chart looking quite weak. It's trading full time from line to the to the downside now. All right, and this past week, you can see here, right? That quarterly open, boom, right there, acted as resistance, acted again as resistance there. Going into this week, it looked like that maybe we just needed to break above this high here, and we'll go back to all-time highs. But like I said, that quarterly open, man, they're definitely finding sellers there, and yeah, the sellers stepped up here. Now this past week was interesting because, man, the news flow around the crypto side was coming in fast and heavy. There's the whole Elon Musk thing, withdrawing from taking payments in Bitcoin. Although the question was, has Tesla even sold any cars for Bitcoin? Then we had the Dogecoin thing play out, and just a lot of cross currents here. But in the end, just focus on price. Right now, outside bar, it took out the prior week's low, and that means it takes out everyone out. So I took out April's lows. So anyone who got along in this sequence either went underwater or got stopped out. Okay, so we know there's a bunch of liquidations. So right now, there's the monthly open. So the bars did defend there, right? So we did get the lower low. It broke that Bollinger Band walk, but they defended the 20 period. Right now, you're back above the monthly open, a monthly low again from prior month, and you're still trading right inside that AMR right now. So that's the question. So, we do have a couple days left here, or maybe a day and a half left of this week. So where do you close in this AMR? Do you close below it, and you see more range expansion to the downside, which is very, very possible? We get the outside bar this coming week. Let's say you close where you are now, right? And all of a sudden you go Momo down. that's range expansion. You got to watch out at that point. At that point, you definitely want to be short Bitcoin for a trade. Maybe eventually the long trend, the longer term uptrend reaffirms itself. But the trade would be, you go outside bar down on Bitcoin. Yeah, you want to be playing out to the short side. In a way that where you can get good trade location. We talked about that last week about good trade location, meaning a place where you can get a good asymmetrical bet going. Okay, so for now, that trend is to the downside, so perhaps more selling to come in Bitcoin. Like I said, coming back down to this area, maybe that 40,000, 36,000 area down here, if it keeps going down. So let's talk about the daily chart, because that was very, very elucidative. So here, to begin the week, we got on Monday, the outside inside. Immediately on Monday, we got that outside bar that stopped out a bunch of folks. Right here, you immediately got that full time frame alignment to the downside, right? Because there's your quarterly open, there's your monthly open, and there is your weekly open. Outside inside, we love that pattern, right? So the question was, how is it going to break that outside inside pattern to the downside, but not before tricking some people and popping to the upside before the sellers overwhelm them, creating the outside, inside, outside, and down. Okay, so here, that's tricky stuff because it takes up both sides of the range. But had you understood the time frame alignment, at any point here, you were still red quarter, red week, and slightly at a green month. But for the most part, once you broke back below that orange line again, it was a red month. So full time frame alignment to the downside, you could have snagged at the downside and made some quick gains to that on Bitcoin. So here's the thing now. As I said, Momo down. It hasn't had a chance to close below the Bollinger Bands yet. So here it's trying to now. This is Saturday as I'm recording this. If you can close below there, you want to see how far it can Bollinger Band walk, right? If at all. Let's see what happens there. But the buyers here really need to step up because this is definitely a danger area. That orange line, that's the prior month's low. You get closed below there, yeah, watch out, right? And this is the current week's low. This coming week, you break below here, you're going to be deep in the Bollinger Bands. But if the momentum steps up, watch out. Boom, you can keep going lower here. That's what I'm watching for. Now, the funny thing is that here is the bigger broadening formation that's playing out. So why do we have the outside bar on the week? It's because you have a higher high and you have some lower lows now. That low is lower than that low. That high is higher than last week's highs. So this is the outside bar, but you're playing out a bigger broadening formation. So now I would not, if we see sellers step up, I would not be at all surprised to see a new lower low, because you need to break below April's lows. Okay, so this is May right now, so maybe create a new lower low, and somehow the issue that I just think the buyers have a hard time here because it's a full time frame alignment issue to the downside. So right now the trend is definitely trending lower here. So the question is, how far will it take Bitcoin downwards? I think that's the question now, because I think it's hard for the buyers to step up here given the time frame alignment. I could be wrong, but I'd be biased to the downside of Bitcoin at this point. So BTC, how quickly things change, right? So that's why we always keep our eyes on these time frames and how things are aligned around the time frames. So this past week, everyone was throwing, Elon did not do himself any favors by releasing that tweet to there. And I think a lot of people were assigning cause to Elon for Bitcoin's quote-unquote crash. But the reality was it was already playing itself out way before Elon's tweet, right? The outside-inside here happened earlier in the week on full time frame alignment. So had if you see this pattern, you got to watch out. You know how that's going to break. It's outside, inside. That means volatility is about to enter the building, and it gets that once you break that blue line right there. So when did Elon tweet that? It was around 6 o'clock p.m. The charts are already broken before 6, but I want to show you on the hourly chart what that looks like. So in the 60-minute, let's zoom in here. The inside bar that I showed you earlier? Okay, so that range is drawn here, okay? The blue lines, the light blue lines, that's your inside bar for the day. If you go to the 60, all right, this is your day right here. Okay, so this is the day. Okay, so this is the day. Sorry, the 11th, excuse me. So it breaks up here. It tags the weekly open, like I mentioned. So the initial break above that daily high went higher. It's Momo up though. So let me just even zoom in further so you can see it better, because it's a little bit small. So this is your day right here, where it begins the day by going higher. But as we said already, it had full time frame alignment to the downside, because you have your quarterly open up here, you have the weekly open here, you have the monthly open there. For about 2 hours, you were trading above the monthly open. issue is that you're deep inside the Bollinger Bands. Well, deep, but you're inside the Bollinger Bands. That means you're doing the Bollinger Band walk. If you break below that low, the game's up, right? And that's what happened. They broke below there, and it was already fading. By the time Elon tweeted, it was here, right? So around 5 or 6, that's when we saw the volume really step in. We had that big Momo down move that we saw ultimately get expressed at 8 o'clock. So this though, once you break below here, right, that triggers the inside bar down on the daily chart right there. That's 2 o'clock. That's like 4 hours before, that's 2 o'clock, so 4 hours before Elon had tweeted anything. So is it possible that people already knew that, some people had some advanced information? Definitely. It's possible that, like given this is not a regulated market, some people were maybe they knew what Tesla's plans were, and they knew what Elon's plans were. Maybe people were offsetting their, their longs already and getting short. That's possible. But even just the charts themselves were telling you that there was a trade to the downside that was more likely to go to the downside and to the upside. Okay, that's what we saw happen here. Everyone, including myself, was leading to the upside. So I got stopped out on that move because I had been long with my low. I stopped below the prior week's this week's low there. But that's I was going to give some space and see how it was going to play out. And ultimately, the stop got hit, and that's why you have stops. You need to get out when the stops get hit. And so flat now BTC in terms of the trading account, and looking to see again potentially more shorting opportunities when we get good trade locations. So ultimately, I don't want to get short here. That's just ugly. I'd rather see some sort of small range that I can take advantage of. Hopefully up here somewhere, right? That maybe creates a potential lower low. But for now, if I get short down here, that's bad trade location because you're inside the Bollinger Bands, and what we know about Bollinger Bands is that we can do the walk, but once you run out of sellers, right? Just like supply and demand on the upside, once the sellers run out, any kind of blip is going to stop you out on that trade. So even though I think the trend's lower, waiting for that good trade location to set up, perhaps take a shot at BTC. So Ethereum, here's one that we got to watch as well, because Ethereum's been on a heck of a run, but I think this is also in jeopardy. So this is where it gets interesting. So Ethereum here, let's just go bigger picture real quick. Okay, inside month, double month move to the upside. I still think you're probably going to end the month green on Ethereum, right? It had a 37% move here. Ethereum's had a heck of a year so far, so look at the 12-month chart. Look at that move. 415%, so not a bad month at all for Ethereum, a bad year, excuse me. So that's a pretty good year so far, a good month so far. And in order to create a reversal on the monthly chart, you'd have to break below there. I also don't think that's going to happen. But for folks who are sitting on profits, I would not feel so bad to take some profits if you get something like this happening. So right now I'm long Ethereum from a lot lower. Now I might take some profits here this coming week if this low gets taken out. Okay, so why is that? Why would I feel comfortable doing that? Because you have a Momo up move here going on, right? Doing a Bollinger Band walk as well. So this is poor market structure. People are chasing here. It will not take much to break below there and for this thing to correct further, for it to come in again, maybe come back in this area. Now, does that mean the trend at Ethereum's over? No, but do you really want to sit through a multi-week pullback pattern where you see your gains get evaporated? No as well, right? So it all depends on when you got in and how you want to manage your profits here. But if you are sitting on gains, I personally will be taking some off the table here if we break below this past week's low. So there's your low right there of 35.55. Sorry, 35.55. Excuse me, 35.55. I do not want to see that go Momo up reversal short, so I would definitely be taking some off the table if that does break. And then, look for other trading opportunities around Ethereum. So looking at that for now, we did get the Momo down reversal long, right? So going into Thursday, so here's your Thursday right there. That's the sell-off. That's the extent of the sell-off on Ethereum. It wasn't that big of a pullback. It's a Momo down move. On Friday, they fixed it by going Momo down reversal long. And today, they took out this Friday's lows. So, trading out at this point, about 7%. So long as you don't break below that 35.55 area, like I said already, this pattern is actually still productive. It's possible still that as long as you don't break below this low, that you can still edge your way back higher and take out that prior bars high. But if you break below there, watch how you can see a multi-day, multi-week correction that could take things lower. But again, Ethereum is still in a big uptrend. Okay, so green month, green quarter, that's not being threatened at all right now. I don't think that's in threat. It's just that if you are sitting on profits, you have to decide how much you want to give back and how long of a pullback you want to sit through, because each person has their own risk tolerances and their own comfort level with sitting on pullbacks and drawdowns. Okay. Now, 2 more charts and then we'll wrap things up. Remember last week we talked about Dogecoin. All eyes was on Doge last week, and I did trade this, and I did not trade it well. To be honest, I could have traded a lot better. Eked out a bit of profits on Dogecoin. Could have made a lot more money on that one, so I did not trade well this one whatsoever. So unfortunately, missed some good profit taking opportunities. Missed some good trades on Dogecoin. Did not trade that well. So it is what it is. We'll get them next time. But right now, Doge, what's it doing? Let's focus on this chart here. Going to the SNL skit last Saturday, man, that feels like a long time ago. It was only 1 week ago, but it feels like a lifetime ago. We were talking about this, right? Going into the double inside week and up, what was going to happen? Were we going to get a continuation move? Going to $1? That was the idea. Maybe Doge can hit $1. So what was going to happen? Was Elon going to say something and do something on SNL that's going to cause this thing to pump higher or ramp higher? The answer was no. I actually stayed up and watched SNL that week, which I never do because I just don't find that show very funny. And now I remember why I don't watch that show. Was really one of the worst hour and a half spent of my of my life there, because it was just painful to watch Elon just stick to making cars and spaceships, because I don't think acting should be in his future. So we had the inside bar, double inside bar up on the weekly, and this is what I was watching for, right? On the daily chart, let's go back there. Going into the SNL skit, we had this. Okay, so there. So it was a Momo up situation. That was the issue. Doing the Bollinger Band walk. So if you see these charts long enough, then you know what's the easier trade, right? You don't fight Momo. That means it could go a lot higher, but we also know what's going to cause it to break, and that is if you break below this low, there goes the Momo up move, and that's what happened. So what I was hoping for was I was hoping for a lower time frame trade that was going to allow me to get into this short. Unfortunately, the trade happened very, very fast on Saturday night. Happened within the first, I think, 30 minutes of SNL, and I missed the trade. Just missed it. It happened so fast, and I didn't want to chase, and I ended up missing the trade. The thing I was able to catch the low there. So I sold at 60 cents, and it did break to the downside. Okay, so that did work. So that was okay. Unfortunately, I did not take profits early enough, because I really, in hindsight, I was hoping for a bigger move than probably was reasonable, but I wasn't sure. Again, it's hard to predict things and you don't know about, so I probably should have played it as a profit taker, because what we do know about Doge, as I said before, we know that it was trading with pretty much not full time frame alignment, but you still had a green month and a green quarter. So more than likely, you're going to see buyers step up, right? So I was short here. I had my stop above there. Okay, so my trade was a pretty simple one. And at no point was I taking any real heat, but at no point was I making a lot of money either. so I think I got up to close to like maybe 1.6R on the trade. It wasn't that big of a mover. So I just held it on, thinking maybe I could, maybe this would eventually break down. It did not. So the day of SNL went down to plus 1R. So, was up 1R. So nothing big. I was hoping I could take out last week's lows, right? And it did that. And that's probably where I should have taken off the trade. Because look, it goes inside bar up, inside bar reversal. That's what I was hoping for. Is if you get the inside bar reversal, maybe you break down further and more sellers step up. Unfortunately, it didn't do that. They defended the AMR there, the upper AMR band. That means there's still buyers in this thing. You can see now it's back to being a hammer again. And I probably should have taken it off right there at the bottom of last week's low. So shoulda, coulda, so it's these are all things that I probably should have done. But again, hindsight's 2020. At the end of the day, I didn't lose any money in that trade. Just didn't make any money either. Well, maybe a bit, but it wasn't really worth staying up late for in terms of starting our life. So I think that's probably my biggest loss is those 2 hours of sleep that I could have had. But here you go, was a up move there. I actually added here. I went inside bar down. I added on that move. probably not a great place to add there. So I was up a bit of money, but on Thursday they immediately jammed it up again. Since it's Thursday, right? This is your Thursday, Friday, Saturday. Yeah, Thursday. Immediately I saw the buyer step up on Thursday. I'm like, okay, I gotta cut this thing short, because immediately it was up. It broke lower. It looked like it was gonna break lower, and I was gonna finally hit this 2R area. But I saw right away on that new day, Doge just quickly up 7%. I'm like, okay, I gotta close this out, because I don't want to be sitting on a loser on this. So set that second I had to break even, and then I set my other trade to break even. So I made a bit of money here, because I took it off before it got up here back to 60 cents again. But in the end, wasn't really much of a trade. Nothing to write home about. So if you really want to be a little of a ninja, you had to be fast on that trade on Doge. So on the 4-hour chart, I think it was the 4-hour. No, I think it was something a lot smaller than the 4-hour. Let's see where we were here. Yeah, so this is probably your best bet without having to be having too much in the weeds. Here it was Momo down, an inside bar, and then it went outside bar. So this is basically an inside bar reversal that happened on the 4-hour and immediately broke down. So that trade would have been nicer. I did not have my order waiting there. I was hoping for a chance to jam it in there, but this move happened very, very fast. So that was the issue, is that when people stepped in, they happened very, very fast. I was fortunate that I was thinking a bit ahead of time that I wanted to get into the trade by at least on that 60-cent level I talked about already. But ultimately, I really could have gotten it a bit earlier and had a tighter stop, and that would have allowed me to make some more profits on that trade. But again, hindsight being 2020. The move happened very, very fast. Next time, just need to be more prepared. Okay, so there's your Dogecoin. One final chart. We're going very, very long today, so I apologize, but a lot of stuff going on in the markets this past week. Let's talk about that shitcoin perpetual futures index. So I'm just going to show you the one time frame here. Here we go. So recall this, right? It was going to do a Bollinger Band walk. So these are all the shitcoins. Momo up. It's extinguished. They repair it here. Look, all off that AMR. That AMR is holding. Okay, inside bar, it goes inside bar up, right? Now, new month, hit the AMR high, pulls back in, hits the AMR low, and then you're stuck. So now you're back in the range. 2 more weeks left. More than likely, shit perp does all this, a lot of nothing. So I think for now, quarterly open down here, monthly open there, mixed time from alignment. I think you probably stay in the middle there of that AMR, and then that carries out that way until the end of the month. All right, so that was the quick update on shitperp. That leaves you with what you need to know on the altcoin trade. And let's wrap up the video, because we've gone quite long this week. But again, there's a lot to talk about, and I hope you found it useful. So as always, if you like the video, give it a big thumbs up there on YouTube. If you want to subscribe, click on the subscribe button on YouTube to be notified when these videos drop, or head over to the blog at thetradingedge.org, where I publish the videos as well. Any questions, feel free to leave them in the comment section in either place, and I try to read them all, respond to all of them when I can. And again, a lot of things moving in, a lot of things in play right now. Keep your eye on the bigger picture, right? Those bigger time frames, the time frame alignment stuff, and make sure you stay on the right side of price. As always, have a good trading week, and we'll talk to you again next week. All the best.